Big tech just literally had the worst performance in a year. Now the question is this a dip worth buying? How should you actually start? Now I'm going to go over the bounce profit in the next few minutes and go over exactly what is occurring in the markets. Now the SPY from last week, let's just go over first of all. The SPY dumped and we had a pretty red day. So these are the few things. We have consolidation for several weeks. About 5 weeks of consolidation. We are within a range, failing to break new highs, but we are creating higher lows. Trend has broken. Structure is changing. That's the first thing that you want to look at. Consolidation means buyers are not there and they do not want to force price higher. No more people want to purchase. Lower highs, trend is breaking down, and the structure is overall shifting because it looks like right now buyers are weakening. Now today, is this a situation of a dead cat bounce? Well, like I said, the past few weeks we have dropped. Now we have dipped lower. We went all the way from last week. The high was 749. All the way down to 717.83. So sellers are in still complete control. Now off the daily time frame, we have the 20 MA. The 20 MA is a great anchoring mechanism because you can see based off historically, we have really taken a close hit. We have not dipped for several months, but then now now it's a very large form of resistance and it's now having trouble getting there. Now, is this a dead cat bounce? Well, this is a doji. We swapped liquidity below. Buyers are here, but it's now the market is closed and the buyers are weak. The volume sucks. It's Monday, June 29th. The market is, we still have, 14 more minutes, but the volume is low. We have a trend line and we're going to probably face resistance because we have continuously made lower highs and look how far we have rejected every single time off the 20 MA. We've continuously rejected. I'm going to be looking for lower highs continuously right now. Big tech in general, let's look at XLK because now we have overall market dynamics, right? XLK. Now, what is another catalyst coming up? Earnings. Earnings is coming up in the next few weeks. We'll have a lot of big tech, Apple, Tesla, Nvidia is farther out, but we are going to have earnings on the calendar soon. And that's a big piece of how the markets react. What is going on right now? And if you look at, because Soxel is an isolated ETF which is just semiconductors. Soxel, again, we swept below. We are still making higher lows right now. So we could have a dead cat bounce based off of this. Now I would isolate within semiconductors, what is the biggest movers? Also, if you want to apply to work with me, link below. All right, so within semiconductors, there is Nvidia. Now, Nvidia had an interesting head and shoulders. And again, we are rejecting. We have continuously rejected below the 20 MA and now we're making lower highs. Now, if I pull this up on the higher time frames, on the weekly, it looks like last week we had a massive dump. Bearish engulfing candle with validated volume. Now, structurally, things have changed. We made new lows. It makes sense for us to try and bounce from it because if we break below this, we're going lower. We're going to see 183s and then possibly 171, which is a very strong threshold for Nvidia because last time we got to these levels, then it started this massive move up. Semis have been moving this market higher in general. The real question is, can AI actually deliver all the promises that they have promised? Which is the reason why you're seeing the market kind of rocky. One thing I want to know, we have been in a bull market since 2023. Markets do not just go down. We have subtle changes of structure before the real move happens. So markets can get tired. So for instance, when we had last, February, the market needs to breathe before possibly making another move. There's a few things right now. It's a midterm election year. Typically the markets do have corrections. We just had one, but it wasn't exactly 10%. In general, before a larger move, let's take it, a step back. Look at this from the monthly time frame. Markets continuously usually go up. However, markets always take a breather every single time and throughout history. If you look at the monthly time frame, we have been sideways, dipped exactly to relative equal lows. The biggest thing, the longer the consolidation, the larger the move it will be. If we consolidate for months, we are going to have a very large move. I don't like factoring in 2020 because that is one that's an anomaly year. 2022, I think, is one of the best times because it kind of showcases we did consolidate. 2022 is a good one because we did consolidate for a while. We had a larger move and look, we consolidated for a few months, dipped lower, and then really started one of the largest bear markets for tech. I think it's very plausible that this can happen. The market has been roaring for years in a bull market. Well, I am not purchasing any stocks for long term right now. It is not feasible right now given many of the stocks, unless you're buying, it's a very stock picker's market. You have to be careful. But you also have to look at the picture and be ready to purchase when things go red. Also, if you want to work with me, link below. I'll see you guys in the next one.